Hi, I'm Kristy Fong, Senior Investment Director of the Asian Equities team based in Singapore. I co-manage the New India Investment Trust, which is a closed-end vehicle investing in Indian corporates. And the primary objective is to deliver on capital appreciation with dividends as a secondary consideration. The fund currently has 37 holdings invested in companies that we believe represent the best of what India has to offer. It is a portfolio of companies that are in the branded consumer space in India, homegrown financial services firms, as well as multinational and locally run businesses that are geared to the manufacturing and infrastructure investments in the country. And of course, India being a country of talent, there are also exporters of IT services and also pharmaceutical research in the portfolio. So the companies that we have, we believe are high quality businesses that are leaders in their respective fields, that are run and managed by competent management teams with a good track record, and also have shown financial prudence. Well, so what we have done in the last 12 to 18 months is to find more opportunities in companies that will benefit from the current pickup that we're seeing in manufacturing activities and infrastructure investments. I think India has largely been a country that is known for its services, the consumption story. And it's quite pleasing to see that broaden out to more growth drivers. So we have been adding to companies that benefit from this current investment cycle. And also just continuing to find opportunities in both the small and mid-cap space as well as the large-cap space where there's better value. Against this, we have funded them by exiting names that are no longer delivering to the investment thesis, and also reducing our IT services exposure because they are more exposed to the uncertainty of growth in the US market, which is a big one for them. Just to explain how the fund has performed, I need to give some context because I'll have to admit that the fund's performance in the last 2-3 years has been challenged, particularly because of year 2022, where a lot of names that we don't own, both groups that we wouldn't invest in, as well as some of the more expensive small mid-cap names have done very well, while our long-term quality names have been more defensive. So what we have done to position ourselves for this year has been to decisively add to areas where we have strong conviction in. So that includes adding to companies that are in the small mid-cap space, whether it's industrials and also pharmaceuticals, and also just reducing where we have near-term concerns, for example, the IT services companies. But what we have not changed is our philosophy around investing only in businesses run by people that we trust. So it's quite pleased to share that since we're coming to the end of year 2023, that year to date, the fund's performance has improved, and we have delivered a return of about 15%, which is 300 basis points ahead of the MSCI India. And that's largely been driven by, again, the names that we have been adding to, so particularly in the areas of healthcare, industrials, and also real estate. And also not having any positions in the Adani group of companies and also Reliance Industries that are both large cap heavyweights and names that we don't invest in for quality reasons. Let me share with you two holdings that we have invested in the trust. The first would be abrdn Industries. That's a family-run, family-owned business. That's actually in a business that seems rather unexciting. It sells transformer oils, conductors, and also cables. But what's interesting about this company is that they are seeing real good growth opportunities in a number of areas that includes renewable energy, transmission expansion, public transportation, and also plays well into the China Plus One theme, where we should see more manufacturing into India. So the company has been expanding capacity. It's taking a long-term, multi-year view here because they see real structural interest in the industries where they are supplying the key components. So that's one that we've added to the portfolio recently. The other is a consumer company called Tata Consumer. And it's a simple, good cash flow business that we typically like. But what's also interesting about this stock is that it's a reflection of how an improvement in management can actually lead to a re-rating in the share price. What attracted us to the business is that it has, it's a Tata brand that is a heritage homegrown brand that actually has a very strong trust factor amongst the locals. The company has quite a few brands within its food and beverages portfolio. And the current CEO has actually streamlined its portfolio and put them together to extract synergies within the portfolio. And that in itself has improved the growth rates, the margins, and also returns of the stock or of the company. So with its good execution, the share price has actually enjoyed a re-rating since we've initiated into the portfolio. So these are the two companies that we have in the investment trust. In terms of the outlook for India, we are positive, especially as we continue to be in a global environment where there are uncertainties around rates, inflation, and growth. So India, on a relative basis, has a lot more going for it in that, it's got good domestic demand tailwinds. Macroeconomic fundamentals are healthy. So inflation is well under control, as is the monetary policy as well. So India actually looks like an interesting place to invest in. That's one. The second is that, we are entering into national elections next year. And whilst we don't want to be complacent about it, we do believe that there is a good chance for the current government to continue. And policy continuity is quite a rare attribute, especially in the emerging market space. So I think we've been encouraged by the recent results of the 3 state elections where the BJP has won against their opponents. So that gives us comfort that, this base case expectation that there is government continuity will be intact. And that itself is supportive for, again, the domestic economic opportunities that the country has to offer. So, but more importantly, whilst we like the macro story of India, what really attracts us to India is the huge variety of high quality companies that one can invest in. And we think that is actually paramount, especially in investing in an exciting high growth market that also can come with its set of risks. So, it fits very well into our philosophy of investing in high quality businesses that are run by good, competent management teams, again, with strong financial management track record, and also, holds, where these companies are also seeing good prospects for themselves in the foreseeable future. So overall, we continue to find India an exciting market to invest in. Thank you for listening to the update, and thank you for your interest. Do check out our website and be in touch with us should you require more information.